Yesterday in Chicago, I helped present the Morningstar Mutual Fund Manager of the Year Awards. You can read about the winners at Morningstar.com. As part of the proceedings, I sat down with Scott Burns, Morningstar's global head of fund research, and asked him how the fund business, which of course touches tens of millions of Americans, is changing in 2014.
There's a couple interesting trends that are happening right now. You know, in the U.S., there's clearly a shift happening from active management to passive management. And so we're seeing the growth of things, ETFs. Vanguard is quickly becoming the world's largest asset manager and replacing names like Fidelity and you know, where you normally would associate active management. We're also seeing some new things develop, and that's where areas like alternatives come in. Multi-asset solutions are becoming very large. So 2014, I think, is going to be a real banner year for some of these newer type strategies.
So passive investing, which is basically another way of saying index funds and ETFs, that's
right.
One trend. Alternatives, what are we talking about here when we say alternatives? And is this a case of mutual funds wanting to be hedge funds?
It is that to a certain extent, and a lot of it is strategies that were formerly only available in hedge funds moving into what we call the 40 Act space, or mutual fund or ETF, you know, vehicles. You know, alternatives, if you ask one person, if you ask 5 people, you might get 5 different answers. You know, our answer is alternative to equity and fixed income, most simply. So we think of the things that are off the style box.
Like what?
So a commodity fund would be alternative. A fund that is market neutral, so to be on the style box, you actually have to have market exposure, and you don't. There are other funds that we don't consider alternative that are still very popular, and these are these multi-asset solutions where you're all over the style box, but you're not off it. So alternatives are really interesting, growing.
So if someone comes to me and says, I think you need an alternative fund in your portfolio, Tyler or George
right.
or whoever, and it's going to be managed futures, what's the smart question for me to ask in that case? Because if this is a trend,
right.
it's going to come into people's living rooms this year.
It is. And I think the first question is alternative to what? And that's a question that we do a lot of work on. If something is going to go in, what is going to come out, right? So if we're going to add managed futures, what is it? What is the risk that we're looking to reduce? What is the return that we're looking to reduce? And alternatives, while a very nice umbrella, there's a lot of diversity inside of alternatives. So you're going to want to understand alternative to what, and then also what is this return that I'm getting?
Are they as a class necessarily riskier than stock or bond funds? Or?
No, and I think that's the interesting. You know, kind of misclassification that happens out there. The reality is, if alternatives are happening correctly, the more risk averse you are, the more alternatives you actually want in the portfolio. Alternatives are meant to take risk out. Now that's where hedge funds got their start. They were hedging. What happened in the financial crisis was that hedge funds took a lot of leverage. They bought a lot of illiquid things. They actually weren't risk reducers. They were kind of return chasers, right? So you know what's happening in the mutual fund and the ETF space is actually a much more lower risk profile set of strategies.
Has the business cut the baloney too thin in the ETFs? I mean, they used to be just sort of market matchers. Now there are all kinds of ETFs for left-handed oboe players and so forth.
Yeah, I mean, I think that those really niche-y, diverse ETFs have probably taken it too far. And the good news is there's not a lot of money in them. So while they're out there, you know, ETFs are still products that are bought and not sold. But there is the next generation of ETFs are coming, and you know we think of it as strategy beta. Some folks call it smart beta. You know, and this is that kind of active manager in a box. There's a lot of Rob Arnott's strategies are very popular in that. A lot of just very interesting things are happening in that, where you can get that alpha. The costs are a lot lower. So that's something that's another big trend
Alpha
for 2014.
Excess return. Scott Burns of Morningstar, thank you very much.
Thank you, Tyler.
Burns emphasizes that most mutual funds are sold, not bought, and because of that, he says it's vitally important for you, the buyer, to understand exactly what's in a fund you're considering, such as an alternatives fund, and then how it fits with others in your portfolio.